0 to 15s. Have you ever wondered what goes on behind the closed doors of private banking? It sounds exclusive, maybe even a little mysterious, right? You might picture a world of old money and secret handshakes, but the reality is both more straightforward and more interesting. Today, we're pulling back the curtain. 1530s, I'm going to walk you through the real, step-by-step process of how to qualify for a private bank account. We'll cover everything from the numbers they look for to the less obvious qualities that can make you a dream client. Forget the myths. This is the practical guide you've been looking for. 3260s. So, what is private banking? Really? Think of it as a premium, all-inclusive financial service. It's not just a bank account. It's a dedicated team of experts, a private banker, investment strategists, wealth planners, all working to manage, grow, and protect your wealth. They handle everything from complex investments and estate planning to specialized lending and even day-to-day banking. But on a VIP level, the goal is to provide a seamless, personalized experience tailored specifically to your financial life. 6290s. Alright, let's get to the question everyone asks first. How much money do you need? This is the most direct gateway. While the exact number varies from bank to bank and even country to country, there's a general range. For most major institutions, the entry point for private banking starts with having at least $1 million in investable assets. That means assets like stocks, bonds, mutual funds, and cash, not including things like your primary residence or other personal property. 90 to 120s. Some banks, often called premium or priority banking, might have lower entry points, maybe around $250,000 to $500,000, offering a taste of personalized service. But for the full white-glove private banking experience we're talking about, that seven-figure number is the typical starting line. And for the super-exclusive, top-tier private wealth management divisions at places like Goldman Sachs or JP Morgan, the minimum can be $10 million, $25 million, or even higher. 120 to 150s now. Here's a key point. It's not just about having the cash sitting in a checking account. Banks want to see investable assets. Why? Because their business model is built on managing that money for you. They earn fees from managing your investments, structuring your loans, and creating financial products. $1 million in a shoebox under your bed is less attractive to them than $1 million in a brokerage account that they can actively manage and grow. 150 to 180s. So, the first practical step is to get a clear picture of your net worth, specifically your liquid and investable assets. Tally up your brokerage accounts, retirement funds like your 401k and IRAs, any investment properties, cash reserves, and any vested stock options you might have. This total figure is your starting point and the number you'll present when you begin the conversation with a private bank. 180 to 10s. But money isn't the only asterisk thing they look at. The second major factor is your financial complexity and future potential. Are you a business owner with a growing company? A tech executive with significant stock options that will vest over the next few years? A doctor with a high-income practice? Private banks love clients whose wealth is dynamic and likely to grow. 210 to 240s. They're not just looking at your assets today. They're projecting your assets 5 or 10 years from now. If you're a 35-year-old entrepreneur who just sold a company for $2 million, they see a client who might be worth $20 million in a decade. You represent a long-term relationship. This is why a high-earning professional with, say, $800,000 in assets might be more attractive than a retiree with a static $1.2 million. Your potential for growth and your need for complex services is a huge green flag. 242 to 70s. Think about it from their perspective. A client with complex needs requires more services. They might need help with business succession planning, trusts for their children, specialized mortgages for multiple properties, or hedging strategies for a concentrated stock position. More needs equal more opportunities for the bank to provide value and, in turn, generate revenue. So, if your financial life is more than just a simple salary and a savings account, you're already a more qualified candidate. 270 to 300s. The third qualifier is what I call the source of wealth and reputation. Check. This is crucial. Banks have incredibly strict regulatory and compliance obligations. They need to know where your money came from. This is part of the Know Your Customer, or KYC process. You'll need to be prepared to document the origin of your wealth. Was it from a business sale, an inheritance, savvy investments, or a high-paying career? 300 to 330s. They will do their due diligence. They'll look at your professional background, your public profile, and ensure there are no red flags. A clean, legitimate, and verifiable source of wealth is non-negotiable. If your financial history is murky or difficult to explain, it's an immediate deal-breaker, no matter how much money you have. Reputation matters. They are essentially entering into a long-term partnership with you, and they want to partner with individuals of high integrity. 330-360s. So, let's say you tick all these boxes. You have the assets, the financial complexity, and a clean record. What's the actual process of getting in? It usually starts in one of two ways. The first is a referral. This is the most common path. Your accountant, lawyer, or a friend who is already a client of the private bank might make an introduction. This is a warm lead, and the bank gives it high priority because you've already been vouched for by a trusted source. 36390s. The second way is to reach out directly. Yes, you can literally go to the website of a bank's private wealth division, like Bank of America, Private Bank, Citi Private Bank, or UBS, and find a contact us form or a phone number for new clients. Don't be intimidated. This is what they're there for. You're the customer they're looking for. You'll typically have an initial call with an associate. 39420s. During this first conversation, be prepared to talk numbers. They'll ask about your total investable assets and the general nature of your financial situation. It's a screening call. If you meet their initial criteria, they will schedule a more formal meeting with a private banker or a wealth advisor, the person who would likely become your dedicated relationship manager. 422-450s. This meeting is a two-way interview. They are assessing if you're a good fit for them, and you should be assessing if they are a good fit for you. They'll ask deep questions about your financial goals. What are you trying to achieve? Are you planning for retirement, funding a philanthropic cause, setting up a trust for your heirs, or expanding your business? The more specific you can be, the better. 450-480s. At the same time, you should be asking them questions. What is your investment philosophy? How big is the team I would be working with? What is the average number of clients per advisor? Can you provide examples without naming names, of course, of how you've helped clients in a similar situation to mine? What are your fees, and how are they structured? Remember, you are the client. You are hiring them. 482-510s. If the meeting goes well, and both parties want to move forward, the onboarding process begins. This is where the paperwork really kicks in. You'll be filling out extensive documentation, providing financial statements, tax returns, and proof of identity. This is the official KYC and account opening stage. You'll work with your new team to develop an investment policy statement, which is basically the rulebook for how they will manage your money based on your goals and risk tolerance. 510-540s. Then, you'll begin the process of transferring your assets. The bank will help coordinate moving your funds from your existing brokerage and bank accounts over to their platform. This can take a few weeks, but their team is designed to make it as smooth and painless as possible. Once your assets are in place, your relationship truly begins. You'll have regular reviews, proactive calls from your banker about new opportunities, and access to their full suite of services. 545-70s. So, to recap the real process. First, build and assess your investable assets, aiming for that seven-figure mark as a general target. Second, recognize that your future potential and financial complexity are just as important as your current net worth. Third, ensure your source of wealth is clean and well documented. Finally, initiate contact, either through a referral or directly, and treat the initial meetings as a two-way interview to find the right partner for your financial journey. 570-600s. Qualifying for a private bank account is a significant milestone, but it's an achievable one. It's less about being part of a secret club and more about reaching a level of financial success where personalized, expert guidance becomes a necessity. Hopefully, this demystifies the process for you. If you found this helpful, I'd really appreciate it if you hit that like button and subscribe for more content that breaks down the world of finance. Thanks for watching, and I'll see you in the next video.